The number one question for real estate agents is how's the market? And I'm going to tell you exactly what happened in the greater Philadelphia area through the month of November next. And if you got some value out of this, you like what you hear, make sure to subscribe to the channel, hit the bell for notifications. And if you want to schedule a call with our team about how we can help you navigate all this data, you can do that with the link in the comments. How's the market? I'm going to tell you exactly what happened right now through the month of November, the number of closed sales in the greater Philadelphia area. So we're looking at the city of Philadelphia, the suburban counties surrounding it, northern Delaware, southern Jersey. This is a metro report. We saw the number of closed sales. They're up 0.5% compared to last year through the month of November. So it's not much. It's a difference of 58,982 closed sales to year-to-date through November, 59,256. So we're a few hundred more. Now, considering we're seeing some of the lowest sales volume since 1995, anything positive is good news. It's flat. We're seeing a few hundred more homes sell. Median sold price is up 8.7% compared to last November's. That's a pretty massive jump, and it shows the strength of the Northeastern markets versus some of the Sunbelt markets. We're seeing less inventory here as well. Inventory's up 7.4% compared to last year at a 2.03 month supply. So what that means is that if nothing new came to the market, everything would be sold in just over 2 months. So we're seeing inventory, and this time last year was a 1.89 month supply, so not much of a difference. It is a 7.4% jump, so we are seeing inventory grow. And it's relevant in that this is November. This is when we see the seasonal slowdown happen. So the fact that we're seeing inventory growth is good news. What we're seeing in terms of days on market is basically flat. We went from 11 days to 12 days as the median days on market for homes to sell. And we are seeing that active listings are up 7.1%. So that's right in line with the 7.4% inventory bump that we've seen. And showings for the month of November and year to date, so November this year compared to November last year to date, they're down 9.8%. However, compared to last year, the same month of November, we saw a 12.8% increase. So less showings overall. We're seeing more activity in November. We're seeing that prices are going up, sales are flat. There's a lot of data here. So what does all this mean? Well, if you're a seller right now and you're thinking about making a move in the next 12 to 18 months, I'm seeing that inventory growth number as a sign that there could be more inventory coming. I don't know that it's going to be a ton because we're still seeing rates in the 6.875% range as of today when we're filming this video, right below 7%. And there are people holding on to those 3 and 4% rates that they got during the pandemic. So it's going to be sellers that have a place to go are the ones coming to the market. So if I'm one of those people, what I'm looking at is how can I get my home on the market sooner? Do I want to be listing in January and February instead of March, April, and May? And we know that the demand is really strong. We're seeing days on market is basically flat at that 11, 12 day range. That tells me there's a lot of activity to be had. There's movement in the market and there's demand out there. So I'm looking at, should I move up my market time frame to take advantage of low inventory levels before supply grows? I don't anticipate us seeing a huge pop in supply. You've got to look at what's going on locally in your market. And the best time for you as a seller to be on the market is when the neighbors aren't. What I'm also seeing is that prices are up substantially. So there's an opportunity to really cash out here and do well compared to where prices were last year. Now, if I'm a buyer, what I'm seeing is that, okay, showings are down. So there's a little less competition now than there may be come the spring market. I'm seeing rates are settling in. They've been just below 7 for a while now. We know the Fed's meeting later this week. That could obviously impact things, and we'll see what happens with interest rates there. There is a 90+% chance we're going to see a 25 basis point decrease later this week. So I'm seeing that there's a little bit of a lull in activity now. And just like we talked about for sellers, for buyers, if there's less competition, maybe you can get in and get a home now without having to compete with a whole bunch of people. If rates do come down further, that's going to cause a lot more buyers to jump back into the market. What I'm also seeing is that supply is growing. You want to be checking active inventory as soon as it becomes available. That's where it's really important to have an agent that's doing that for you. So you want to be moving quickly because the market's moving quickly, understanding your numbers, having all your planning items in place, the pre-approval, the cash to close, understanding the process, knowing how to write the documents so that When the right home does come up, you can move swiftly to avoid some of this competition. There is some good news here, but waiting could also cause you to pay more as a buyer, given what we've seen happen with pricing being up 8.7% year over year. So we're seeing a return to normalcy here. We're seeing things kind of slow down a little bit compared to where they were just even 2-3 years ago. And obviously, everyone's situation is going to be different. So if you heard something here, you need a further explanation, or you're just kind of curious where the market's headed over the next 12, 18 months, you can schedule a call with our team with the link in the comments.